What's going on? Do we tie this to the political wins and how ESG is just out of favor right now?
So Scarlett, you're right. In the first quarter, outflows from America's ESG ETFs were about $4 billion, which is, quite substantial. I've always said that this has been, concentrated to a few funds, so it's not really this mass exodus out of ESG. At the same time, we aren't seeing inflows, and I actually tied that back to the political backlash. Investors sort of have their, I call it cautious blindfolds on, so there are no inflows, but the outflows are a bit overrated to me.
A bit overrated when it comes to those outflows. I hope that Eric Balchunas is listening, but can we talk about what actually is ESG right now? When you take a look at these funds, what do they tend to hold when it comes to their actual securities?
So you have a couple of categories, right? You have first ESG integrated, which is basically funds broadly considering ESG risks and opportunities. I have to say on average that does tend to overweight tech. It's about 2% overweight tech versus the S&P, 2% underweight energy. On the other side, you have thematic funds, climate funds, gender funds, and carbon markets funds, for example, and they tend to take on their own themes. So that's really the broad categorization.
So ESG funds are not seeing as much demand. They're also shutting down completely. Talk a little bit about the liquidation of these kinds of funds.
So liquidations has actually continued from last year, but at this increased pace. So I would say so far we've seen about 26 funds liquidate versus about 36 in all of last year. And I've crunched a bit of the numbers. I think ESG ETF liquidations are about 30% of total ETF liquidations, which I thought to be quite eye-opening.